clarify that the winding up of the funds does not mean a write-off, and investors will receive their money over a period of time, depending on how we are able to liquidate the maturities and the coupons we receive, etc. And unfortunately, for a brief period this morning, there was a misleading news article that we had wound up some additional fund of funds, which is absolutely not the case. So I also want to assure people that there is no question of our commitment to India. That commitment remains steadfast. All our other funds, besides these 6 funds, remain open for subscriptions and redemptions, and we remain committed to our investors and our business in India. In March and April, I'm sure you can imagine the decision to wind up these 6 funds was extremely difficult, and we only made it because we believe it was the only viable way to protect value for investors and give them an orderly realization of the portfolio assets. And particularly coinciding with the time when the lockdown was announced, we started to see significantly reduced liquidity in the bond markets for most debt securities, but particularly for securities that are rated below AAA. The March numbers for redemptions for the industry also look extremely elevated. We found that we were having to resort to borrowing and increasing levels of borrowing. We felt that was unsustainable. It was value destructive for unit holders who remained in the scheme, and therefore we had to take this very, very difficult decision to wind up the schemes. Creating daily liquidity at any cost in a market environment that was illiquid was actually penalizing investors who stay in the scheme at the cost of investors who are redeeming from the scheme. And so that was the principal basis on which the decision was made. So we looked at suspending redemptions, but regulations only allow a redemption suspension for 10 days in every 90 days. And you still have to pay out about 2 lakhs per investor per day in each scheme. First of all, 10 days was not enough in our opinion for a dislocation of the kind that the pandemic has created and the lockdown has created. We even considered whether we should do a distressed sale of assets. But one, there's very limited risk appetite in the market, so you couldn't really liquidate significant parts of the portfolio even at distressed prices. While it may look like all of the funds have the same securities, actually the individual security selection was based on the fund's core philosophy of investing across the rating spectrum, the duration needs of the fund or the portfolio composition needs of the fund, and our assessment of the attractiveness of the credit. So given the size of the funds and the size of our domestic balance sheet, it simply wasn't possible for us to create the necessary liquidity for the required length of time with the cash that we had available on our domestic balance sheet, Sumera. So we did keep the regulator briefed throughout the process, and I must appreciate that they were very open and supportive throughout. The line of credit, even if it is offered at low cost, is still a borrowing, and we didn't feel it was prudent to continue borrowing for long periods of time because it wasn't very clear to us how long this market dislocation and illiquidity would remain. We at Franklin clearly saw our redemption spike after the lockdown was announced in March, and while I think that trend normally reverses in April if one goes by history, this year we did not see that trend reversing. And yes, we did seek increased borrowing limits in some of the schemes, and we had to use these borrowing limits as well in a couple of cases. Stress testing or liquidity testing is done on a regular basis in all these funds, and these funds have managed their liquidity with the same type of portfolio, the same investing philosophy over the past many years. Once the market returns to normalcy, we will aim to liquidate the portfolio and expect to be able to do so well in advance of the maturity dates for the portfolio holdings. One is required to conduct a poll of unit holders around the process of liquidation and how the liquidation should be conducted. And yes, we will shortly be reaching out to all unit holders for that. They are continuing to receive scheduled maturities. They continue to accrue the coupon, as their accrual strategy funds, and they will continue to have an NAV. What is not possible is for investors to purchase or redeem these funds.